New data just proved that inflation is here to stay. Now, what is that going to mean for the Fed going forward, and how is that going to affect markets? Because the overall numbers that they're reporting is showing that everything is all great. But if you take a peek underneath the hood, it shows the reality. It shows that inflation is here to stay and it's not going anywhere. Now, what do I mean by all of this? Well, 72% of the CPI components are now surging faster than the Fed's 2% in target rate, and it's the highest share in 3 years. So, of course, we saw since COVID, we saw that inflation went drastically down. Of course, we had that massive amounts of money printing and stimulus that made inflation levels go down initially. But of course, right after that, boom, skyrocketing up and seeing the amount of inflation just shoot up. This is a significant increase from the 55% you saw a year ago, which is still greater than you would hope. So by comparison, the average percentage was 57% between 2018 and 19 before the pandemic. So Apollo claims that the good inflation is climbing again due to tariffs. Look, 72% of inflation of consumer price index are rising faster, and that's because it's broadening inflation. It says it's not just concentrated in a few categories, it's spread out all over the place. And so, because it's spread out all over the place, well, the Fed's target is now going to potentially rise. And comparing it to past trends, the 72% noted is the highest in 3 years, indicating significant increase of the breadth of inflation. For context, there's reports saying it's inflation due to tariffs or other things. So some of these implications might see that the monetary policy and the spread of inflation will change, but the economic impact will be broad. That market reaction will report of broader inflation can create uncertainty in financial markets. Now, the other interesting thing that we've seen from all of this is just how Powell talked about core PCE. Now, I'll play this clip for you guys here so you can hear it from him himself.
Core PCE prices rose 2.9% last month, also higher than a year ago. Goods prices, after falling last year, are driving the pickup inflation. Incoming data and surveys suggest that those price increases largely reflect higher tariffs rather than broader price pressures. Core PCE prices rose 2.9%.
So core PCE rose up that 2.9%. Goods prices driving picked up. Income data suggests, oh, they're reflected largely from higher tariffs. Everybody's going to use that as the out. But the reality is that stocks are set to retreat from the record high as PCA inflation data and Powell's remarks awaited because investors were focusing on all of Powell's remarks. Now, if you take a long look at all of this, he's just blaming tariffs. Young people will need higher skill level in evolving labor market. That we're in a low hire, low fire economy. They're not hiring one way. It's all because of the tariffs. But if you look at the freight, where it's all about the differences here, well, it's showing that the freights are already in a recession, and that the index tracks freight shipments within North America and serves as a key gauge of the U.S. shipping activity. So in August, it's the 28th consecutive monthly decline. That's terrible. 28 straight. So 28 straight, well, the tariffs were just implemented not too long ago here, folks. So if the tariffs were implemented, 5 months ago in May time? Well, 28 straight months of decline of freight shipping means that it's not all because of the tariffs, believe it or not. We've been in a decline for quite some time with all of this. So with this, we're going to keep on checking how the inflationary symptoms are rising through and how we're seeing a bunch of the investors, let's say, react. Because Right now, we have 35 days until the next FOMC meeting, with about 91.9% chance that we cut by 25 basis points. Now, investors all over are seeing all these different craziness. I mean, like, look at this. Like, we're seeing crazy just volatility in the market because, the US government looks like it's going to buy 10% equity in this stock. And they're looking at crypto as a viable asset. Look, as you guys know, I'm a big Bitcoin proponent, but a lot of these different types of investments are just being looked at now because of the inflationary concerns that we have. And the way that Powell is looking at the financial markets and how these things are changing, well, the overall just drastic nature of the movements of stocks is changing. And Powell is coming out and saying that the stock market is, quote, fairly highly valued, whatever that means. Right. I think he means it's potentially a little overvalued at a certain point. But either way, right? A lot of these people are looking for a way out to beat the inflation because, in the reality, I mean, this is comparing the dollar to Bitcoin, but the US dollar is having one of the worst years in history while Bitcoin is up 30% year to date. And I've covered this a bunch on this channel, so you guys that keep coming back should hit that subscribe button for me. But you guys know that I've been covering that 97.2 at this Dixie level is very low and it hasn't been shooting up. In fact, it's one of the worst we've seen in 50 years. So, I think at the end of the day, when we see the stock market shoot up, I tried to call yesterday that we would close above 67. I was wrong. So, those of you guys that are coming back, I'm sorry. I apologize, man. I can't make all my calls right. But at the end of the day, we're seeing the S&P 500 still float around these all-time highs and shoot up. The Dixie crashing pretty low, and the PCE numbers coming out and inflation skyrocketing in flight. So I think at the end of the day, we're watching all of these things and seeing the era of new markets just come along. And the dynamics of these markets drastically changing. Now, it is interesting because everybody's keeping a close eye on a few different things, whether it's, 401ks, whether it's, all of these different aspects. But gold has been essentially sending us this message for quite some time, where gold futures have extended gains as a record of nearly 3,800 an ounce, up by 42% for this entire year. So with this, right, with gold having just a generational run, it's doing even better than the S&P 500. And the S&P 500 is having one of the best rallies that we've ever seen in history. So seeing the change here, it's drastic. And I think that, with gold just rallying off, we're going to have to keep a close eye on it. And Foster in the chat is saying, would gold go up if the government revalues its reserves? They don't plan on selling, but it would allow them to get money printed. So I assumed it would still be inflation. So here's the one kicker with all of this. It's a great question, but people don't take into account how long would it take to revalue the US gold. And I believe it would take something like 18 months or maybe even longer. Um, so it would likely occur relatively quick, lasting only days or weeks on paper. But we would have to see if it's real gold. That's the thing. So it's faster on paper. The process is allowedly at accounting as long as gold has not physically moved. No, there's a political process. It has to be implemented in Congress. There's some economic decisions. So, I mean, like everybody's been saying that the US should be revaluing the gold, but I don't necessarily think it's as simple as that. One, we don't know if the United States has moved their gold at all. So we have no idea if it's all there. Two, JP Morgan saw it at not too distant past where they had their gold and they got sold counterfeit gold. So if JP Morgan got sold counterfeit gold, would the US worry that they got sold counterfeit gold and need to go back in and test all of it? Now, if they need to go back in and test all of it, well, that would take obviously significantly longer as well. So not only would that be potentially significantly inflationary, well, that would send the US into more debt as we see. And so this is why we see strategies like the US looking at moving in seized Bitcoin, for example, into different ways. We've also had Russia come out and said that the United States is potentially going to use the crypto markets to try to pay off their debt. So there's a lot of rumors floating around about this. But one thing we do know for certain is that if the US really wanted to revalue their gold, they would have started doing it already. So I think that this is going to be a very slow moving process. So I don't think that, the reality of the United States revaluing its gold is really happening anytime soon. But there's interesting aspects of all this. Money market funds and assets under management hit a record $7.7 trillion. In the first 4 days of September, this fund attracted $60 billion in net inflows, and it's doubled in the last 5.5 years. Normally, seeing a double in 5.5 years is pretty damn good, to say the very least, folks. But the reality is, like, everybody's expecting heavy gold inflows with all this. So according to Crane's index, money market funds are yielding about 4.1%. And compared to the national average of just 0.6%, America is chasing risk-free yields. But nothing in life is not risk-free, right, folks? Nothing in life is risk-free. So I think that's one thing that people are missing with all of this. And so I think, you know, these guys about data, and we're seeing craziness in the markets with like Nvidia, right? Essentially OpenAI 100 billion to give it right back to Nvidia. It seems just like one giant, I wanted to say circle jerk, but I guess I'll still say it's circle jerk, where essentially it's just going in a circle here, where these guys are essentially just giving themselves all of this money here back and forth. Now, it's interesting, right? Because we see the potential issue of the S&P 500 now selling above 3.3x of its sale, the highest valuation in history, right? So everybody's looking at this market and saying, oh, you know what? Everything is good and dandy. But if you take a step back, everything looks to be extremely overvalued. So this 3.3 overvalue, and then how top heavy the S&P 500 is just screaming asset bubble from the top of your lungs. So I'm going to be following this all very closely. Make sure you guys are hitting that subscribe button for me. I appreciate you, Foster, for coming in. You're saying that I'm considering moving from VOO to RSP to hedge against the overweight Mag 7. Might be a good idea. Like, not financial advice here, folks, but I mean, at the end of the day, it is very overweight, to say the very least. I'm going to be tracking all of it here, so make sure you guys are hitting the bell notification so you could join Foster in the chat, and you guys could all join me. Thanks to all 5, 6, 7 of you that joined at one period in time, and I'll catch you guys all tomorrow.